Joining us now by phone is Don Steinbrugge. He's a managing partner at Agecroft Partners, also a founding principal of Andor Capital, which had spun out of Pequot Big Hedge Fund. Don, as you watch this, as you listen to the details of all of these charges against Raj, are you surprised?
You know, I'm not surprised. I think the evidence they had against him was very strong, and I would have been very surprised if he got off.
Well, because I asked that question because when these charges, when these stories first broke implicating Raj Rajaratnam, founder of Galleon Group, huge hedge fund manager, there were people in the community who told me off camera they were very surprised. They knew Raj. They didn't expect this from him. At this point, has he just sort of been set adrift by the industry?
You know, I don't think so. I mean, when you read the evidence that they had, it sounded very, very powerful. And Raj was a very nice guy, but you know, most people aren't going to know what he was doing. The Feds did a lot of research on it. They got a lot of information, and it looks like they made the right decision.
Don, I mean, what does this change for the business that you are in the hedge fund industry? What changes now?
I think it's a positive. You know, insider trading is wrong. Insider trading hurts everyone who does honest research. And I think what it does is it's going to reduce the probability that people are going to trade on insider information. I think people are going to spend a lot more money on compliance and educating their investment staff and what insider information is. I think it's going to change how hedge funds utilize these third-party consultants, and I think they're going to be very careful to not trade on insider information, because if they get caught, the downside is huge.
Well, as you say, it's going to push up compliance costs at a minimum. Hedge fund managers are going to have to pay out more overhead to those lawyers on their staff. They're obviously going to have to field a lot of questions. We're not just talking about individuals. We're looking at pension funds. We're looking at fund of funds. We're talking about people who are going to be calling the funds they have money with and asking some real tough questions right now.
Which I think is all positive. I mean, these hedge funds are going to change the way they do business. One is because the downside's huge. The other is the people who they want money from are going to be asking a lot more questions, and they're going to have to show these investors that they are taking this issue serious and that they have certain policies in place to eliminate the probability of trading on insider information.
But Don, you know, when you talk to people in the hedge fund industry, and particularly some of the guys who are trying to hang out a shingle right now or build their business, they were already talking about how, in some ways, they viewed it as unfair. Say, you know, the regulation has been in that it has added so substantially to their overhead. If you're a small fund, if you're a startup fund, it's really hard to start up right now. Do we see, you know, the horizon cleared of some of those smaller players because of these bigger bills as a result of this today?
Well, I tell you, over the past 2 years, it's been very difficult for the small hedge funds to get money. Most of the money has been going to the largest managers, but I actually see a shift back to small and mid-sized managers, because I think a lot of the larger hedge funds have gotten too much money, and I think it's going to affect their performance going forward. It is a big burden for them. So some of them are having to go out and get seed investors in order to generate more revenue to pay for this expense. But you know, it's just something they have to do. It's part of, you know, growing the business, and if they're successful, they can be very wealthy.
All right, Don Steinbrugge, Chairman, Agecroft Partners. Thanks for calling in with your reaction.